Now it's time for our weekly energy update with Dan McTeague, president of Canadians for Affordable Energy. All yours, Dan.
Well, thanks very much for that, Teresa. It looks like we have very interesting moves now. We've talked about this for the past few weeks, saying that, this sort of pent-up demand, the markets seem to be moving on the energy side in sort of a sideways direction where they're not taking into account the fact that it's warmer weather, demand is very strong, the fundamentals continue to show every indication that with supply not being as robust in many parts of the United States and Canada, that we should be seeing increases in prices. And what we're getting so far is oil. It's moved up about, well, if you look at the beginning of June to where it is now, a month ago, oil was sitting at $73.50 a barrel for West Texas Intermediate. Right now, that's pushing over $84 a barrel, likely to go to $88 a barrel. So that's the oil side. Gasoline side, we're getting a bit of a break, mostly because I think markets have not been able to appreciate the fact that, while refineries have been churning out a lot of gasoline and diesel, they are losing the battle because sooner or later they have to come up for air or maintenance, or they have to, as it were, curb their production, given that the cost of oil is starting to head up. So we call it crude to rack spread. That's the margin. Some people go 3-2-1. I won't get too technical about it, but what it really means is that the less money that they're making turning more expensive oil into cheaper gasoline, it means that they're going to likely slow down that production. So I would anticipate that the effect of this over the next few weeks will be a continual rise of 2 and 3 cents a liter for gasoline, and maybe even 4 cents a liter for diesel. If I look at the energy markets, diesel prices generally are more expensive than gasoline. It's something you haven't seen since something called IMO 2020. That's when they shifted the quality of marine oil, bunker fuel, diesel from high sulfur to low sulfur, and that's when diesel prices were much higher this summer. But in summer, we tend to see diesel prices sort of taper off. They're not doing that this time. Most of that is due to the fact that we are seeing increased demand for air travel, mining, and of course, agriculture and many other transportation needs that can only be satisfied with the production of diesel. So all that means is that right across the country, this time next week, we're going to be looking at an average increase of about 3 cents a liter for gasoline and about 4 cents a liter for diesel. What does that mean? Well, let's start with the Maritimes this week in Atlantic Canada. Newfoundland's now pushing back towards $1.83, $1.84. Look for that to move to $1.85 to $1.86. Nova Scotia, PEI, New Brunswick, again, a 3 cent net increase, which will put them on top of the 2 cent increase, the 2.5 cent increase that we saw this week. And with diesel in all of those 4 jurisdictions up net 4 cents a liter. Quebec, you're looking again at prices that currently range in at about $1.80, $1.79, $1.81. Look for those to move to $1.83 to $1.85. And for Ontario, which is at $1.69, $1.70 today, look for average prices increasing about 4 cents a liter to $1.70, 4.9. There are exceptions. I know places like Kingston, Sarnia, Peterborough sometimes where it might be down 4 or 5 cents a liter. Heck, even Sudbury, where it costs more to bring gasoline, which is the same wholesale price as Toronto, it's seeing 163. That's not going to last, and they're going to be back towards $1.78. Likely by Tuesday of next week. That is also true of Northern Ontario. And as we head towards the prairies between Manitoba, Saskatchewan, and Alberta, I found it interesting that gas prices in Winnipeg could be had for as little as $1.33. The interesting part is that even because they cut the gas tax there, it was costing most stations $1.33 or $1.34 to buy their gasoline. So losing a penny or two, not being able to even cover the cost of turning on your electricity, to turn on your pumps, pay your staff, pay your overhead, honor credit cards, honor those loyalty programs. When you get those little cards that say, hey, guess what? You can have 7% towards groceries. It's a gas retailer that has to pay for that. They have zero margin, and you can imagine they're going to have a tough time. That's why prices in Winnipeg jumped from $1.33, $1.35 up to $1.43, and that's likely where they're going to remain. Saskatchewan, love staying at the $1.52 to $1.55. I don't see any increase there. Alberta, $1.48 to $1.56. Look for those to increase an average net of 2 cents a liter. Yes, a lot of demand in Calgary, of course, with Stampede, and of course, good weather. that could also be very bullish for energy prices as more generators and others are in production.